Hey, Chris, good morning. What's up?
What's happening, my friend? I'm good. How are you? I got a haircut.
Looking good. This is Brian Jones. I'm here with Chris Hood, professional trader, world's most interesting man, telling us about what's going on in the market today, I think.
Oh man, tell you what an interesting week we've had. It's I've been saying for the last couple of weeks, February for 20 years has never been a good month, and it's starting out like that. So yeah, it's been pretty interesting, my friend. The movements in Bitcoin have been fascinating to watch, and silver has really come up with a bit of an opportunity. So interesting stuff. I really believe inflation is around the corner, and if you're not doing anything to protect yourself from inflation, it's going to get rough. You know, the bond market's already starting to tell us that inflation is coming with rates going up. So I think it's all this money printing is starting to come home to roost a little bit. So
You can't just keep making money without causing inflation. That's it's historically it's not worked.
The problem with economics is that it's a real science. So you can pretend it doesn't exist, but supply and demand really pumps things up. I mean, I think I was looking at oil. You just look at the price of oil over the last couple of weeks. If you look at the treasury inflated or treasury protected bonds, those are up like 20% in a month. Silver for me is the hidden opportunity. So as you know, we do a lot of stuff in the silver stocks side.
I have some positions in silver, so I'm glad you were saying that.
I think silver for me is the sort of hidden asset. Everyone pays a lot of attention to gold, and gold looks horrible right now. Technically, it looks disgusting. But silver, if you start building a position there, silver is one of the few things that also has an industrial element to it, right? So there's this lot of, it's not just a precious metal that stores value. It's got an industrial component to it. It's used a lot in manufacturing. So, I think that you've got to be pretty flexible when it comes to your precious metals. You can't just go on the one side. I think you need to do both. But silver looks interesting. I think there's definitely something.
Is there like a relation? What's sort of the relationship between the silver and the gold prices?
It's always been, I stand corrected, but I think it was around 30 ounces of silver to 1 ounce of gold. And then all of a sudden it sort of broke away a couple of years ago. And it does get tracked. I think on stock charts, there's some interesting charts that you can see where it looks at this ratio. Let me see if I can find it while we're talking. One of the things that you've always got to remember is that ratio has to maintain some element of standardization. So I'm going to pull it up. Let me see if I can find gold-silver ratio history. Here we go.
I know you said you did did a bit of like precious metals trading for a while.
Oh yeah, silver and gold used to be my thing. I'm just trying to see whether this one is the one. Yeah, so let me share the screen, and this should work. This should be quite cool. All right, so check this out. So here you can see the gold price, gold's S&P to gold prices, US correlation. Let's see, gold prices to oil, oil to gold, Fed balance to gold price, silver to oil, silver to gold is what we're looking for. Platinum to gold. So here you could probably see it. So this is the ratio of silver to gold to silver. And look at this, all until they took the dollar off the gold standard. There's this sort of predictability and stability that comes with it. Now all of a sudden, look at that. So now we're sitting here somewhere up at 80. Looking at this, you probably see your average would be somewhere around here, somewhere around 40 to 50, somewhere there. So this is way extended. So silver has a lot of catching up to do. As far as I can tell, silver needs to catch up to gold rather than the other way around. If we look at the technicalities here, let me eliminate some of these drawings. If you look at silver over the last couple of weeks, this is the last couple of days. So look what happened. This was that Reddit explosion that we had. back on the 1st of February. And then we had the immediate pullback. And again, it comes down to the whole theory about extension, right? So as soon as the stock gets extended above this third Keltner channel, it's inevitable it's coming back. All right, so there was the pullback to the 8, bounce off the 34. Here was your confirmation to go back into silver here. This is when you would have bought your new position on this candle here. There was a little bit of heat there. But look at this. From here, if you'd got in, let's say, at 25.37, you're sitting here at around 26 now. Look at the range of yesterday. Look how wide that candle was yesterday. Plus, we have this momentum firing to the upside. So for me, I think that we're going to see silver somewhere up here within the next 2 weeks, next week to 2 weeks, somewhere over here, somewhere between 28 and 27 over here. There's definitely an opportunity. So we've been building positions in here. We've got positions in 5 silver stocks.
What are your favorite silver stocks?
I like AG. First Majestic for me is probably the best. There are 2 silver stocks worth buying. If silver moves, there's 2 silver stocks that move a lot. One of them is AG. The other one is Pan American, which is this one. At a push, you could probably look at Heckler as well. You know, these are cheap stocks now, but if silver has to go up, PAS, HL, and AG are probably going to be the 3 that move the quickest. You could obviously play AGQ, which is the leveraged silver. So AGQ sits over here. This is just leveraged silver. So this is double SLV. I like it, man. If there was, you know, when I talk to you about edge, you've got to trade with an advantage over something, because the problem is when you're trading, the likelihood of the person on the other side of the trade knowing more than you is pretty high. If you're a retail trader, you've got to assume that the guy on the other side is a professional and he's seeing things you don't see. So when you've got edge is often calculated not by the chart. The chart gives you very little edge. It's the leading indicators. So for me, the squeeze indicator, which is a histogram of price compression and momentum, right? It's a compound indicator of price compression and momentum, is probably one of the only forward-looking indicators that we have available. Because if you look at anything, MACDs, RSIs, any of these binary indicators, they don't exactly tell you where the stock is going. They tell you where the stock has been. So anyone who bases their strategy on anything that's a binary backward-looking indicator, it's very difficult to have a win rate or a success rate higher than 50% using just that single indicator. And there are very few strategies I know of that use single strategies or single indicators by themselves. It's usually, I have a dominant indicator, which is the squeeze, and then I have secondary indicators that come along. And those secondary indicators validate. They just confirm. So the secondary indicator could be a candlestick pattern. It could be the relationship between these Keltner channels. It might be a crossover of the moving averages. It could be the ADX. It could be the RSI. It could be the MACD. It could be anything of that. And if you're a retail trader, it's about combining these into a system that allows you to consistently apply the same rules that will give you success. So here's a nice setup. This has got a really nice setup. It had an extension above the third Keltner channel. There was a pullback and a period of consolidation. Now we have a potential breakout to the upside, possibly to this high. All right. So I would see it. I don't think it's going to go up to 71. I certainly think that a retest of the recent high is probably on the cards. Now, with the squeeze, I would want to see a little blue column. This light blue column I would want to see over here, because if I see the light blue column, I have confirmation that momentum is shifting to the upside. Now, when you've got these green dots, there's no compression, which means the Keltner channels and the Bollinger Bands are not inside the Keltner channels. All right, so that's what I'm looking for, is this price accordion. When you think of the accordion, it makes, you've got to pump it up like this, right? You can't really make a noise if you're not doing this. It's the same thing with stock prices. Stocks tend to expand and then contract, expand and contract. And what we want to do is capture an expansion to the upside if you're going long and to the downside if you're going short. Now, you won't know to which direction the bands are going or price is going to move unless you have an indicator giving you a degree of directional momentum. So most retail guys get sucked into buying at the top. This is the predominant problem with a lot of retail traders. They buy in here. They have no idea of momentum or direction. So they buy, oh, it fell. I've read the book on stop losses, so I need to exit. So they buy in here and they exit here. They are always doing the same things wrong the whole time. Now, it takes a lot of work to unlearn the psychology of buying at the top and selling at the bottom. You have to unlearn it because it's just part of us. Our fear response in our brain of missing out and getting the tip from our buddy on WhatsApp. We have these sort of lizard brain moments, I call it, but our lizard brain takes over and it's like, but if my buddy's in it, I better do it as well. And then they do it and then everyone loses. And then, have you noticed no one really talks about how many people lost on GME or on AMC? No one talks about that.
There are some people holding some really expensive shares of that.
Oh, let's for everyone, let's have a look at what people are holding. There's a couple of people that bought GME up here at 483 and it's now worth a whopping 46. And this didn't take long. All right, this was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15 days, 2 weeks.
All those were the days where the people were hoping it went back up. They're still like, it's just dropping.
It's absolutely crazy. I think we did GME. We were trading it here. We got out here. We followed the rules that we have around extension above the third Keltner channel. That would have been a safe trade. I think we made about 300% on our trade. So we got out. Okay, did we miss out on this? Absolutely. But I know how my brain works. And I know that if I'd stayed in the trade and got in over here, I probably would still be holding it over here. That's just the way I know that I trade, because if I don't follow my rules, I will fall into the same fear trap as everyone else. I've got, it can only go up. It can only go up. And the irony of it is, when you look at some of the tweets that were being posted of hold this, this is, diamond hands kind of nonsense.
Yeah.
Those guys had already sold. They've already made their money. They need those people to hold on. So maybe I'm being a bit more of a conspiracy theorist than I'd probably want to be. But, playing this game, it's not useful. You don't build a career out of this. This is one way to see yourself go right down the toilet, right down the tubes. So tough lessons. I have very little sympathy for people who bought up here if they knew better, especially if they knew better. If you didn't know any better and you borrowed money from your parents' house and you put it in there and you've lost, my sympathies go out to you. But, at the end of the day, you shouldn't be playing games you don't understand. And it's a harsh reality, and it's a horrible, I don't like saying it, but it's real. People, this is not a game. You cannot hack this game. There is no hack to this. It takes hard work and expensive lessons, because believe me, I've experienced this not once, but maybe 3 times. So I know this, and I've lost money on it. So you lose once, you go, okay, no, next time will be different. And then you do it again. It's like, next time will be different. The third time, if you still haven't learned your lesson and you do it for the third time, well, you deserve the nut shot.
Yeah, for sure. I mean, I'm getting less and less emotional about everything. So,
well, the thing that you've also got to look at here is, when you trade options, you will accept a degree of volatility in your account that's going to show up and down. I never get calls from people complaining when their account has upward volatility, right? When their accounts go up in value. But heaven, I tell you what, I get a lot of phone calls when it's the other way around.
Yeah.
And I always say to people, down swings in price don't last forever. All right, they don't last forever because the market is naturally built to rise in price. So when things fall down, remember, we take the stairs going up and we take the elevator going down. But the elevator has to stop somewhere. All right, it can't just carry on going down forever. It's not going to do that. So at some point, these sort of parachutes kick in, and these parachutes are support levels. And if you do any form of technical analysis, you can have a pretty good idea. Maybe you're not 100% accurate, but you've got a pretty good idea where those support layers are going to sit. And if the stock continues to fall past, there's another one, and then there's another one, and another one. So what you do is you've got to start getting into the habit of removing risk off the table. It doesn't mean we go to cash. All right. I don't believe in that get out, hedge everything, go to cash, because I have an uncanny ability to hedge myself and time the market perfectly to the wrong way. Because whenever I put a hedge on, within days, I've lost money on that hedge. And then I go, well, what the hell was I doing it for? So what I tend to do is take the risk off the table, maintain some form of long exposure, ideally through the shares. Ideally, I wouldn't want the option, because if the option is falling in price or the stock is falling in price, that option is getting killed. I might not have a way of getting back to break even on that option. So I switch it into the shares, get rid of the option, have no time erosion risk, that theta decay risk on that position. And I just gradually reduce my exposure, and my cash balance starts to move up. So as the market tends to drop in value, my cash balance increases in value relative to the value of my account. So ideally, when you start watching your extremes, right, your cash balance relative to your total value, when your account is flying, that's a signal to start taking money off the table, right? You want to maintain that cash balance. And you can't do it if the value of your account is going up and your cash has stayed flat. The percentage of your account that is cash is dropping. So when your account balance is floating up high because the valuation of your positions is going up, and your cash balance percentage is dropping because the account's going up, that's a signal to start taking profits off the top, putting it into cash to maintain that balance. And when the market tends to fall down, your cash balance is here, and that balance starts to rise relative to the value of your account. But you've also got less exposure. So it's just a few of these tricks that I do that help give me a sense of, well, I know that this is not going to last forever. I'm fairly comfortable sitting on my hands and waiting for a rebound. But for that rebound to have an effect on me, I need to have a cash balance in order to buy more contracts when things start to turn around. So you've almost got to think opposite to what you see. I see this as a huge opportunity. Like, there are a couple of positions. We had a trade on Spotify. Our first trade on Spotify didn't make any money. Didn't work, right? So as it was coming towards the expiry of that first trade, we built our second trade. Our second trade looks like it's going to win. And if you look at Spotify today, it's not going to have a good price day today, I think. It's going to be down in price, but the trade is starting to work. It's starting to move in that direction. So we lost here, but we're going to make it back here. That's the way that you've got to trade options. You have to trade in multiple time frames. You can't just go, well, I'm going to buy it now and then I'm going to ditch it if it loses. I look at it and go, I could have bought the shares. If I bought Spotify shares, 100 shares, it would have cost me 30 grand. I'm not paying 30 grand for this. I maybe paid $1,000 for it. So I lost 1,000, but on this trade, I'll probably make 1,000. So I'm now back to square. Should I carry on with spot because I'm now in the trade? Maybe the signals are positive for me. So I stay with spot. I'll do a second trade, a third trade, a fourth trade. And by the fifth trade, by the time all the indicators disappear and it's now, Spotify is done, I might have made $6,000 or $7,000, even though I lost 1,000 on the first trade. So sometimes you've just got to stick with things. You've got to stick with what works. You can't just chop and change. A lot of people chop and change, new stock idea number 5, don't do that. I have a watch list that I look at every week, and I just focus on those. And if there's trades that come out of there, great. If there are trades that don't come out of there, I'm not going to force trades to come out of that list. Sometimes there will be setups that will come in, immediately, and I will do them.
I know you were talking about on the webinar, maybe it was just one of the calls about how you like your tickers at the end of the year to be all profitable for the year.
Yeah, yeah.
You know,
Look,
if you lose on one, then
yeah, it's a pipe dream because I've never had it. I've never had every ticker to be profitable, but I try and get as many to be profitable. So I know that 70% will be profitable. That's my record, right? 70%. And I'm also winning 70% of my trades. So I'm more than happy to accommodate 3 out of 10 trades being dogs. I just don't know which ones are going to be dogs. Who would have told me, last year, throughout the year, Tesla was my nemesis. It still is, right? Tesla is one of the hardest stocks I've ever traded because it's got so much end of week volatility. Just the nature of its trading, the nature of its price movement is hard to work out. So I went through like 6 or 7 months of last year with Tesla just, kicking me in the nuts every single week. And, every week I go back and I look at my notes and I try and work out why the trade didn't work. And sometimes it's not going to work. No matter what the signals were telling me, it just didn't work. So then I started to adapt my strategy and I started to change it. I was like, maybe there's a different way to approach Tesla. Maybe doing the long calls or maybe doing the bull put spreads is the wrong approach. Maybe let's use butterflies. So I started using butterflies and bang, I started nailing them towards the end of the year. And I made back all of the losses that I had on Tesla doing strategy A, B, or C with strategy D. Okay, and at the end of the year, Tesla turned out to be a profitable trade for the year. So even though during the year I was taking, I was tapping out pretty frequently to it, I had the strategy of, look, I'm only really going to judge my performance at the end of 12 months. Judging your trading ability after a week where the market is going through a rotational reallocation of assets, we're moving out of some of these high-priced tech stocks and we're moving into some of the sort of travel-related stocks at the moment. You can't judge your entire trading on one bad week. You can't do that. And if you do, you're very, very vulnerable to not having a proper plan in place. That, to me, the plan is everything. If you don't have a plan and you're trading, you're on borrowed time. You really are going to be on borrowed time. So,
so what do you see the market or how do you see SPY?
I think over the next couple of weeks, February for me for 20 years has always been a dog month, right? So I'm if I can still come out profitable, which I am already for the month, I'm not going to be too concerned where it is. I think
is it bad because it's sort of unpredictable, like there's choppy, or is it normally just a down month?
No, I think February has a sort of thing about, look, the rally from Christmas is over. All right? So, people look to start taking profits. We've got the end of the first quarter's earnings, right? So you've got all of this rotation coming out. A lot of companies have reported earnings. A lot of guys are, we've had earnings estimates going up. But, I think the market overpriced a lot of this stuff, which is why a lot of these stocks pull back at earnings, which is why I don't like trading a lot of earnings results, because it's a mixed bag and it's a coin toss. I don't want to be doing things on a coin toss. So coming to the end of February, we've got all this rotation coming out of all the stocks that have benefited from Christmas and, the Q1 earnings. And that money is now going into stocks that haven't really delivered much, that have dropped, that maybe are underperforming. So it's just this rotation. It's a sectoral rotation as well. We're moving out of technology and we're moving into some of the other sectors. So when you look at the SPY, is this still a trend that's going up? Absolutely. Let's just change this a quick bit. That's the SPY. Look at where we are. We're stuck over here. We're not doing much. This is not doing much. But look what happened from sort of November to the end of the year. This is like rocket fuel. There wasn't really any big pullback below the 8. That was the last time we've been below the 8, was down there. Oh, we did touch the 8 there albeit briefly for about a week. So where we are now, it's not a huge issue. Look at the extension. We were trading pretty much between the second Keltner and the third. There's our 8-day moving average. There's our 34. Okay, cool. We're just going to see what happens now. If this pulls back, I think we could get, I don't think we're going to go all the way down to maybe the 2 Keltner or the 3. I doubt we're going to go down here. Could we get to the 34? Yes, but look what happens when we get to the 34. Bang. This is what I'm looking for, is this. So for me, if the market suddenly, falls out of bed and, just, plummets, I'm far happier than seeing a sort of slow bleed with 1,000 cuts. I don't like the slow bleed thing. I like, get it over with. Just go down and then come back up.
Yeah.
If you're going to choke me out, do it fast. Don't do the slow, the slow bleed.
Right.
So I think that we're going to see some testing here of the 8. Could this go all the way back down here to 382? I would say it's possible. If we look at the options market, let's see what the options market's telling us. So if we go out 2 weeks to March 8, the options market is telling us a $12 move on 387. That puts us around 375, all right? 375 is somewhere here, there, 375. Puts us underneath the 8 and below the 1 Keltner move, somewhere down here. Would I be comfortable with it getting all the way down here? Yeah, I'd be okay. Because you have to think where the market will be 6 months from now. All right. And we know that these periods of decline don't last for long. So this cone of probability is based on a 68% probability of price. So this is a 68% confidence level. So if we go out and we say, well, in September, there's a 68% probability, on the 22nd of August, there's a 68% probability that the market will be at 480. Do you crap the bed now and sell everything and go to cash? And then when would you get back in? Would you get back in when it's up here? Would you get back in here? Like, that's the hard part, is knowing when to get back in, because your fear it's grown so much, you wouldn't know when to get back in. So for medium-term swing traders, I think that the possibility of just de-risking your positions a little bit, building your cash, waiting for the price to come back down here, maybe to 375, holding for a close above the 8. So remember, the 8 is going to curve like this. When the 8 curves, you want 2 closes above the 8 to confirm the movement going back up. What you don't want to see, so here are the warning signs. If we see the blue line cross the red line to the downside, bad idea. At that point, hopefully you're all in cash anyway. All right, so that would be my fail safe, is if this goes down there, if this crosses, so if the red line's going like that and the blue line comes down, I'm out. I would want to liquidate my account.
Which?
The blue line here is the 8-day moving average. So whenever a shorter duration moving average, we call that the fast one, crosses over the slow one, so declines below the slow one, that's a bearish signal. And similarly, if it's crossing to the upside, it's a bullish signal.
Is that the 20-day? I was just, the red line, the 20-day?
The red line is the 34, I think it is.
Oh, 34. Okay.
Yeah, it's the 34. So these are the EMAs, right? So you've got to keep your eye on that. That's why whenever we have a crossover here, that's a bullish signal, right? So maintain that bullish bias. There's definitely still a bullish bias for the long term, because this is the trend. But for the short term, yeah, I think we could see some pain over the next 2-3 weeks, which wouldn't be unseasonal. We've been saying this for the last couple of weeks. So nothing that's happening is a surprise. Because if you're not watching the market condition and you're not looking at history and you're not looking at certain, indicators, you wouldn't know. You would see these as random events of price, and that causes that fear to come in and go, oh, I'm out, or whatever. I don't exit things unless there's a reason to exit things. So I've still got, positions in Riot and Mara and all of that, because I still believe in the bullish case of Bitcoin and cryptocurrencies. And that's the way I can play it, because I don't have a wallet. I don't own the currency itself. I own the stock in the miners of the currency. So, yeah, they're going to take a little bit of heat when there's a price decline in cryptos, but that you have to accept those as normal if you're willing to accept the upside when things go well. That's just the price of things going well. Yeah.
So you think you're going to get a lot of calls today?
I hope not.
Do you get? I was just wondering if there's the times like when the market drops, you get people freak out a little bit.
No, my clients, most of them are pretty seasoned now. Yeah. And a lot of them, because a lot of the stuff has been conditioned into them around understanding what it means. Sometimes when you have an options portfolio, the bid-ask spread of a position widens when liquidity starts to move around, right? So you could be having a position that's fine, but you've got, sellers on the one side, up here, and you've got buyers over here, all right? And that spread is so wide that on your account, it could look a lot worse than it really is. And if you've got 190 days to expiry and the stock is not moving, but the spread is widening on the option, don't close it. Like, this is why I encourage people, don't look at the positional P&L as your determination point for exits and entries. You should really be looking at the graph and understanding the movement of price, because that's the driver of your value, not whether there's people in the market or not. That's crazy. But it takes time for people to learn this. This is the hard thing. I'm just looking at my picture and I'm realizing how dark I look. And I promise you, Canada, we have electricity.
Get that mysterious look.
Yeah, we have electricity here. This ain't Texas, man.
How is the weather up there?
Oh, it's cold, man.
I think
we're looking forward to our 4 days of summer at some point.
We just had this crazy ice storm that took everything out, all through the South, which is, I know that Texas got hit with, a lot. They were really unprepared for it.
I heard someone tell me they had 4 inches of ice on the road.
Yeah. Well, in Kentucky, we had about maybe 1.5 inches. Everything was shut down. It was just undrivable if you don't, if you aren't prepared for that on a regular basis.
If you like here, if we have 40 centimeters of snow, 40 centimeters, like that's like this, the schools are still open, buses still drive, cars still work, everything still happens if you've got less than 40 centimeters of snow. So we actually had 40 centimeters of snow 3 times in the last couple of weeks. I hate shoveling, man. I'm still moaning with the fact that they told me Canadians go to Mexico on holiday and it's a short flight. And, I was expecting weather like Mexico. It doesn't happen. But it's -8 or -9 outside with the wind, probably -16, -17. That's horrible.
Yeah, that's
horrible. I love the place, but man, the weather is tough, man. It's brutal.
The winters, I can imagine.
And they're long, man. They're long. At least now, though, the sun isn't setting at like 2 p.m. kind of thing.
That's always depressing to me. Like I like to see the sun occasionally.
We lived in London once a couple of years ago. Well, not a couple of years ago, like 10, 12 years ago, we were living in London. Yeah, the sun would set at like 3:15, 3:30 in the midst of winter. It's like you go to work and it's dark. You come out when it's dark. It's just miserable. Yeah. Here, at least the sun is setting around 6:15 now, so that's a little bit more manageable. But it's cold, eh? Oof. I don't know.
It's I was in Iceland a couple of times, and the second time I was there for the solstice, summer solstice.
Nice.
And
the sun doesn't set there.
I know, it was just, it's like I can only imagine the inverse of that, because it was, we had been out doing stuff all day. I went over and did some jiu-jitsu at my friend's place, and we were hiking, and I did some like snorkeling at the Sulphur Springs, and all. Just really cool day. Just packed all this stuff in, and so we're sitting around, just like, what are we gonna do now? And we're like, it's 2 a.m. And it's like completely like full sun, and you're like, oh my, you just have to put a mask.
Did you go to the gym there, the one, Thor's Hammer, or
Yeah, Mjolnir.
Yeah,
Yeah.
I got that place online, man. I want to go train there one day.
I went there back in 2009, and I know one of the owners. Got to be friends with him, so he's got another place now called Tier. It's really cool. Like, he does.
I definitely want to go to Iceland to train.
It's cool. They're good. I mean, it's super cool place. I want to go back, but it's just I want to see what the winter's like. See if I can handle just a week of it or something.
If you come practice, you can come up to Canada. We'll stick you into some nature park just for a couple. Because I know how much you like living with nature. We'll stick you into one of the parks, and I'll come fetch you in like 10 days. I'll go to the hotel with the fancy sheets. You can have the tent in the car.
I'll do it.
So here's a quick thing for people who are interested. A couple of stocks worth looking at. We've discussed SLV. One of the ones that I like at the moment is Hilton Hotels. This one's been really good. I've done this one with our day traders. Seems to be moving up quite nicely. Not too overextended just yet. So we're trading up into this band here. I would say that we're probably looking at this stock getting to, let's have a look. So probabilities, we're probably going to see it somewhere up here around 128 over the next 2 weeks from the options market. That's what the options market is predicting. A little bit extended here on the daily, but on the weekly chart, we've got room to move. So I like this one on the weekly chart. A couple others worth looking at. SKT we did yesterday. So SKT is already up 12%. I'm not sure it's a trade worth doing or chasing, but something to keep your eye on. On the daily, look at the movement that we've seen here over the daily. All right, we've got this. I like this setup. All right. I like to build positions once we start seeing a reduction in the downward momentum on the histogram. So as soon as this turns to yellow, I'll start looking to add a position. So I've either got it coming in when I see the red dots forming, which is the compression is starting to form. So the Bollingers are starting to compress. The yellow bar signifies a reduction in the downward momentum. So there might still be downward momentum, but I'm going to add a position now, maybe a third or maybe a quarter of a position to start building it up, because I don't know when this is going to fire along. And if you look at it, we put the position in yesterday, which was there on price. No, 22nd. We did it yesterday morning, right about here on that probability there, and it's already gone up. So, something worth watching is we can make it back up to this previous high. So this previous high looks like from the options market, we're only going to get back there in June. So you want to be trading this into these levels up here. So SKT is worth looking at as well. I'm just looking at other ones worth looking at. Let's see. Lows, like we did have a couple trades on lows. We've made a bit of money already on lows. We exited our long call yesterday pre-earnings, and we left the butterfly on. Now what we're looking at is if lows can move up, we've got a target price mid-strike for Friday at 190. I don't think this one's going to work. Expected move of 9.6, that puts us at 181, which puts us just into the net. So this one's a little bit enthusiastic, should we say. But if I could get this closer up, I might be able to exit this without losing anything. It's not a big position. This only cost us $100, so it's not a huge amount of capital. But now that we've got the, I just want to see when earnings was. Earnings was today or tomorrow. It's tomorrow. After earnings, maybe what we'll do is go back into the trade. HD had earnings yesterday. Looks terrible. So glad we're not in that one. I'm just looking here at the list, and I'm cross-referencing it to the list that I've put down for stuff to do. DOCU, I like it. This squeeze is pretty good. So if you look at DOCU, you know, I quite like this stock. It does have some really good characteristics. Let's have a look at its 4-hour. So you can see how extended this is now. This is really, you know, it's by a 2 Keltner move. You can see the faint red bar coming there, which may push it into a 3 Keltner move. And this stock, when it gets to the 3 Keltner, it moves up pretty quickly. So maybe I'm waiting for this to drop just a little bit further. 2 confirmation bars on the hourly. Let's have a look at the hourly. You look at that, it's already past its 3rd Keltner channel. So from here, I would be looking for a reversion to the mean. So the mean for me would be, once I've got 2 closes, green, so higher highs, even though it's below this, I want to get it from here back above the 8. So the trade would be quite short term in duration, maybe a butterfly, maybe a long call, but I'm not looking for it to go from here to there. All right, I cannot expect a reversion from the 3rd Keltner at the bottom to the 3rd Keltner at the top. What I want to do is get in, go to here, exit, see how it handles here, get in again, trade it up, exit, see how it handles, bang. And so you're going to have to do it in pieces. You can't really just buy and hold. It's not going to work with this. But this stock, whenever it hits these low extremes, tends to bounce pretty severely. So worth looking at this one for that.
So do you like those trades for like really short duration?
Yeah, you have to. And this is the hard part, though. Sometimes it might actually make sense just to buy stock. So we've been in this X trade for some time. Doesn't look particularly good being down 48%. But let's look at the chart. So if I look here on the daily, this setup is fantastic. Look at the slingshot that's coming around the corner here. This will more than likely fire to the long side. There's no compression, though. I don't have red dots. All right, so all I've got is directional momentum. I don't really have compression. I don't have earnings in the way. What we do have is a fairly cool setup on the technical. So let me just remove that. So look at where it's trading here. Look at how it came above. You see how the blue line is just about across the red line. So I may just get a buy signal today. If this blue line can cross over the red line today, it's got a negative crossover already, but here's the potential for a positive crossover that we saw from yesterday. All right. So if this can fire along to the upside and we can get the price above the 34, we could see a movement up here to the 3rd, which is at 21, which would then put it just above the expected move for the week, which is at 20.49, which pretty much brings me to break even on my trade. So it might land up being a trade where I don't make anything in this week, but I could land up resetting it for future weeks with the same capital, just move it out 1 extra week or 2 extra weeks and trade it that way. So I like this one as well. SQQQ, yeah, this one, you know, the short NASDAQ ETF, you know, you can see this big movement here. We bought short S&P 500, right? So we did the short on the S&P 500, just a long call as a form of insurance. Now, I'm not expecting to make millions out of this trade. This is not a make millions. This is just a temporary thing to keep our P&L ticking over, right? So as some positions start to lose, we'll start building these positions as well. Could we do something on SQQQ? You know, the problem is with these inverse stocks, it's the reversal. That's what scares me the most about these things, because these reversals happen really, really quickly. And, you know, you're trading a stock that's in a significant downtrend, right? If anything, you want to be short SQQQ. So you short SQQQ by going long TQQQ. Now, this little period that we have here, where the stock, and this is when arthritic fingers is not healthy.
Just too cold up there.
There we go. All right. So if I'm over here and I'm just highlighting this PCA. So if you look here, you see how quickly this has moved from the second Keltner line. It's now almost at the 1 Keltner line. Expected move is somewhere here around 1475, all right, for this week. What I don't want to be doing is going long now, and we have a reversion on Friday, and it goes all the way back down here. The time to buy these shares is not here. It's not here. I want to be buying it when it's underneath the blue line. So all of these days here, I would have been acquiring. But there was no reason to, because the market was moving up. You know, so this is a really difficult trade. It's not an easy one to spot. So, you know, just be careful. You don't want to be buying things here and then we have a reversion back to the normal trend before the increase. Remember, the trend before the rise or fall is what drives the stock. So if the stock was rising before it fell back to the 8, it's going to resume the previous trend, which was falling or rising, whichever one. So bear that in mind. This is not a, I don't think there's a crap shot trade here. There's no, for me, there's no real edge on the trade. There's no compression. There's no movement really for me to be capturing. If we look at the weekly, there's just nothing. You're not really trading anything here. It's
so you
mainly just below the 8. You know?
The SQQQ as insurance, like an insurance position.
You know, the problem with insurance is you'll end up paying because, you know, maybe it doesn't work. This is another thing that affects people. Not every position that you take should be viewed at constructively. So if you buy an insurance trade, you want to hedge yourself and you lose on the hedge, the hedge did its job. You shouldn't want to be making money on insurance trades, because if you're making money on trades that are counter your book, you're losing on the main part of your book. You know, so
yeah, it's like having a fire extinguisher and being excited when you get to use it because your kitchen's on fire.
Exactly. You know, so don't forget that you're always going to pay for this stuff. So the decision to add it needs to be very calculated, because there's a high likelihood you will lose that money. So if you over-insure things, you could potentially take a bit of a bath, right? So you've just got to be careful. Like I would say to people, this period of price decline in the market, A, it was anticipated. B, it's not going to last forever. C, if you're getting out now, you need to know when you're getting back in. Because if you're getting out now at a loss and the market bounces without you in, that loss was probably unnecessary. So it's like a psychological game now. This is not a, you know, I wouldn't be saying ditch everything and, you know, get your canned food and go and hide in the corner. You know, there's none of that yet. None of that yet. But the thing is, you can't trade in that mindset. You can't trade positively in that mindset. I trade positively. I trade to win. I'm not trading just so that I can break even. I'm not trading to make think or swim rich. Like, that to me makes no sense. I'm trading to make money. So I'm going to look for the best setup. So now, with the market being a little more fragile, what you really want to be doing is adding maybe a little bit more clarity on your rules. You can't be as loose as you might have been 2 weeks ago, right? Because when you're loose, the market can be quite forgiving when you're loose. Oh, you know what? I went in on 3 criteria. I usually go in on 8 and this trade still worked. Okay, great. But now look for 5, 6, 7 conditions to be met before you do a trade. Don't look at just 2. So just remember that, you know, your flexibility is driven by the market condition. You know, I will still do trades even if there's one condition being met, because it depends on a range of setups. And if that setup gives me an edge, I will trade it. And I don't expect to win on everything. I expect to lose on everything. That's the difference between trading to win and trading, to lose. I've accepted loss before I win. Most people who lose in trading have not accepted the loss, which is why they act differently when the market tends to go against them. So if I lose on a trade, I've already accepted it. So I've position sized it appropriately for me to go, I don't really mind. Or I've de-risked it, so I've got no capital in there. Or my cash balance is high and I don't really have much at stake. But people who overload and they put too much in and they really need the trade to work because they've lost 9 times in a row.
Right.
Those are the guys that land up making bad mistakes. They really make bad mistakes. So this is a mental game. Most retail traders don't know the mental game. They know the technical thing. If you go to someone, okay, go buy this, sell this, they know that. But understanding how your lizard brain works when it comes to seeing red on your screen takes a lot of help. It's not something you can read away in a weekend. It doesn't work like that.
I noticed it's like you just have to get sort of numb to it. And obviously I'm still working on that, but I don't know. The first few months were a little difficult for me.
Yeah, but now as you've experienced it and you've seen the cycle, it's almost like a cycle. Most people should not consider themselves to be good traders until they've done at least 2 or 3 years. Because you have to see the good with the bad. And most people only like to recognize their good stuff. When people go on social media and they tell people how good they are at trading, they don't tell them, hey, I lost 20 grand here. They only really say, I made this or I made that. And it's so disingenuous because it gives the impression that the market's like this. Anyone can do it. You just walk in and throw your money on red and you're going to win anyway. I don't know, man. When I see a lot of these courses saying hack this and hack that, and 5 minutes on a weekend is going to turn you into a trading expert. You go tell that to a guy who's been trading at Goldman Sachs for 30 years. And you say, yep, I can get all your knowledge and intuition in 5 minutes on a weekend with some dude who's traded for 6 months. You're going to get punched in the face. You're going to lose your money. And this is the irony of the whole thing, right? Every single person I know in options only wants to trade to win. We all want to win this game. But the difference between the people who win and the people who lose, it's not their intention. It's not their intention because everyone wants to win. It's the way that they approach it. If someone comes to me and says, I want the simple, 5-minute solution on how to make money out of options, I go, you know what you do? Don't trade. Because the 5-minute solution is sit on your hands, do nothing, and you'll never lose. I guarantee you, I will put money on you will never lose. You also won't win, but you'll never lose.
Which is winning in a way.
Yeah. So yeah. I think a lot of guys miss that. Don't look for the hack. Appreciate the hard work that goes into making a system that works for you and that can be consistent. Because those hacks don't work all the time. They might work for like 2 weeks, and you might land up going, gee whiz, I've made, 5 grand. I was only thinking I was going to make $1,000 and I won on 6 trades. And then the market turns and you're trying to do the hack in a new market condition that you didn't recognize, and now you've lost everything that you've already made plus more. But the hack was there. The guy sold it to you and you paid your 20 grand for the 5-day course and it's not working. Now what are you going to do? That's the problem. Most people don't know what to do when it stops working because there's
you have to have hundreds of hacks. Like no
hack. I read some guy's material the other day and it was like 5 minutes to understand spread trades. And I'm like, dude, it took me 3 years. Maybe I'm just mentally challenged. Maybe I'm just stupid. You can't learn this in 5 minutes because the conditions under which the trades work change. So if you're not looking at the variables within the trade, technically the trade, you can learn it in 5 minutes, but to apply it profitably, consistently takes time. So you could learn the trade in 5 minutes. I can teach someone how to do a trade in 5 minutes. Can I teach them to be profitable under all the market conditions in 5 minutes? No. Because you need the market conditions to actually be there for you to learn that. And 90% of the time, you know, these guys are going to be selling you a strategy or teaching you a strategy that only works under the conditions of the day. You cannot learn this historically. You know, options are so dynamic that if I read a book and it says, oh, if IBM had been doing this and then it did this, yeah, that was 20 years ago. Life has changed.
Right.
You can't teach like that, you know. So, you know, just for all the people out there, be careful. You know, what you see, there is no 5-minute solution to this. It takes a lot of work. And the people who put the work in might not make the same amount of money as the guy who sits on Wall Street bets, putting all of his money into those things that those guys are doing. And you know what? Good luck to him. I know from my experiences, if it comes easily, it's going to go easily. You know, put the work in, respect your account. And when you respect your account, it's going to deliver that respect back to you in terms of value increasing. So always important to see it that way.
Yeah, good advice. Well, Chris, it's been great talking to you this morning. I know the bell's getting ready to ring, so.
You too, my friend. I'll see you next week. And, you know, anything that the guys want to know, send us a comment and we can talk about it.
Sounds good. Take
care,
care,
buddy.
Have a good one.
Take care. Cheers.